tracking your fear index. So wherever you want to take this and explain what's going on your guys, then feel free. But Andy, enlighten us here.
Yeah, so the LikeFolio Fear Index does a pretty good job of tracking investor fear in terms of conversations that investors are having around ticker symbols and, more of the investor chatter. Normally, LikeFolio is, focused on consumer behavior, but in this case, the LikeFolio Fear Index gives us a gauge much like the VIX in terms of investor fear and that kind of negative sentiment in the market. And right now, we're seeing that level at the highest that we've ever recorded, which should be no surprise. The market has moved an incredible amount over a prolonged period of time, and there's a lot of volatility, which scares investors in a really big way. And so what we can say right now is that investor fear is extremely high. I don't think that there's any surprise there. But when we look at the mentions of coronavirus on social media and specifically Twitter, and we look at that over time, we're actually seeing a drop off in that, and there's kind of two reasons for that. Number one, people are not referencing the virus by name anymore. They're just saying this, like this is getting really bad, or when will this end? And that's impossible for us to track. So there's a loss of fidelity there for us. But the other part of it is we're starting to see a sense that this is becoming a little bit more settled in as a way of life or as an expectation. And, we see that in the markets on the investor side, and we also see it just in the general population side where investors are getting used to 4% and 5% moves. Those really aren't even hitting the radar in terms of what people are talking about. And from a general population perspective, you're starting to get used to, all right, this is closing down, that's closing down, new case there. Nothing's really surprising at this point, at least in terms of the normal news cycle that we're seeing now. So, investors in the general public seem to be starting to get used to a new normal. We'll see how that translates over the weekend. It feels like every few days things change so much. It's kind of difficult to say what's next, and that's reflected, I think, in volatility in stock prices.
Andy, hold that thought here, and it's a lot of good information. I think the idea of this maybe fatigue around the coronavirus just because it's becoming more of the normal way of life is certainly an interesting conversation. But the New York governor, Cuomo, just announced 100% lockdown of the workforce, and they all must stay home now in New York State. So this is breaking news. Maybe this is what's led to some of this volatility that we've just seen in the last couple minutes here. Kevin, I want to get your thoughts on that announcement. Is this expected? Is this unexpected? Is there more cities to follow from what you're seeing?
I think it's expected based on what we saw out of California last night, guys. I think this is just a very similar one. I think that all they're doing is basically saying, don't go to work. If you have to go to the grocery store or the pharmacy or something like that, you're fine. But they don't want people, I appreciate what they're doing. Let's face it. The West Coast and the East Coast seem to be where the greater density of this virus is. And sorry, Andy, I hate to say this virus is hanging out. So the fact that they're taking these drastic steps, I think is the markets should take some comfort from this, that these municipalities are doing everything possible to stop the spread of this virus.
Yeah.
Yeah. And Andy, if we tie this into what you guys are tracking and how you're I was just going to say, if you're tying this into how you're tracking things here, Andy, what do you make of this? Is this kind of what the sentiment around what you guys are seeing is leading to people starting to think, or is this a surprise in terms of what the public might be expecting?
No, I actually think that this is not a surprise. Just like Kevin said, I actually think if the stock market can rally off of this, or just not put in massive lows today, that would actually be a really bullish sign. The entire state of New York closes down and the market doesn't blink an eye or rallies, I think would be a real indication that some significant negativity is already priced into this market and that there's upside to go from here. Look, I think it's really strategic of Cuomo to do this on a Friday at noon. It's just, over the next 3 days, let's just keep people in their homes. And then, like I said, things are changing so fast that by Sunday we may have a whole different take on this entire situation. And so keeping people at home and non-essential business activities to a minimum over a weekend seems pretty smart to me. And I think that the market, I know it's down a little bit since the announcement, but this type of, you got to think, what would have happened 2 weeks ago on this type of announcement? The market would have moved 7 or 8% to the downside in a few minutes. The fact that it's not tells me that this was expected in some ways, and it is a little bit of that new normal that we were talking about.
I think that's a brilliant point, Andy, and I think that's actually exactly how I'm looking at this is, yeah, we did sell off, but I mean, we're down 8 S&P points right now on the session. Right. A couple of weeks ago, to your point, this would have been, unthinkable. And now it's almost priced in. At least, I don't want to say it's fully priced in because we have no way of knowing that for sure. Right. But based off the market reaction, it doesn't seem to be that surprise that maybe you would think something like this would be, just given how significant it really is. But this idea that it's short term, or it's at least not going to be forever like this, I think, calms some as well. But I want to talk more about your fear index and your data as well, Andy. That's what we have you on here for, and I want to make sure that we really cover this here. Tying this in and looking at your fear index, the chart that we're looking at is actually a 7-day moving average. So I'd expect that this is going to have a little bit of a lag in terms of when it's going to peak out. But do you do that to smooth out some of these spikes that are maybe around when you get the random halts of the market at the 7% level, that maybe it comes in on some of those morning talk shows and things where maybe people who aren't normally watching the market are now suddenly talking about it?
Yeah, that's exactly why we do it. We found that a 7-day moving average on this index has been, it's smoothed things out. It's given less, kind of false positives in terms of absolute market fear, and that's exactly why we do that. And I'll tell you what I'm doing this weekend, while I'm sitting at home, is I'm going to be going through looking at, for opportunities in the stock market. I'm trying to stay positive. This is a very negative time, so you try to stay positive, look for opportunities, look for silver linings. And the way I'm thinking about that is, all right, let's look for companies with a really great balance sheet that have a really loyal fan base, that when they open back up, they're going to be in good shape. We kind of call those, the blue chip beaten down kind of names at this point. And they're going to survive a shutdown. And when it comes back, it's going to be good for them. And then the other side of it is, like we've talked about on this program before, what are the companies whose adoption rates have accelerated greatly because of this crisis, and whose business model is built to take advantage of that for the long term because they're subscription based. And I think when you start thinking about things in those terms, the opportunities become a little more clear, and we can do some good things from here. But I'm not saying markets are bottoming or anything like that, but I do think that it's time to start, like Kevin said, start putting together that shopping list of companies that you might like to own in 2022, and start looking at the next week, 6 weeks, 12 weeks, whatever it ends up being, as an opportunity to get in.
And Kevin, I want you to join the conversation here as well. Thoughts on what Andy just kind of pointed out, building that shopping list, but also to the point that he made, a moment ago regarding the fact that, what if this is starting to be the expectation and not necessarily a surprise on markets when the S&P is only down 5.25 on this shutdown in New York, and maybe what's going to be a nationwide shutdown in the near future.
Yeah, I mean, there's an economics term called diminishing returns, right? And every time something happens, the effect of what happens gets less. I mean, the fact that in the last 18 hours, we've announced 2 major cities in the United States shutting down, and the E-minis are down 4 now, which means the United States and the U.S. financial markets are starting to come to grips with where we are, how we're fighting this, and it looks like to me like the United States is all in on getting this stamped out and reversed. So that being said, the way these municipalities and towns are fighting this, people are starting to get less of a negative sentiment. Now, I don't mean that's positive yet. I mean, we're still, people are still worried about the duration of this, but people are starting to get less negative and settle into their new way of life as we are here. And business still goes on for a lot of people. And it looks like this administration is ready to help and assist and bail out these sectors and companies that need help. I mean, can you imagine any world where the United States doesn't have a major airline builder and allows Boeing to go out of business? That will never happen. They will never simply rely on Airbus to make planes. So Boeing will never go out of business. The United States government will guarantee that, if not for the military and that. So things like that, you can start to make bets on good quality companies. You're seeing that being made today as some of the people are migrating towards the highest quality companies in these indices. And I think you're seeing that right now.
Yeah, Kevin, we can't ever say never, but I hear what you're saying. I think it's a good point. But Andy, I wish I could let you go easy, but real quick before we let you go for the weekend here, give me 1, 2, 3 names maybe that you're thinking about putting on that shopping list, and maybe 1 or 2 that you're avoiding.
I'm going to avoid the cruise lines. I don't think that comeback is anytime soon. I think that behavior has changed fairly permanently. I think, when I look at airlines, I think those come back pretty nicely. You're already starting to see that today. Subscription-based services like Netflix, Amazon, Walmart is getting a nice uptick in its mentions of subscriptions to groceries, and that behavior is changing. And so I think there are opportunities out there and some pretty big names, and then there's some undiscovered that I'm going to really work on figuring out this weekend. But I will say, as we go into this weekend, I just think everybody should kind of start to think about the idea that the market not being down 2,000 Dow points today on 2 major states closing is pretty interesting to think about. And where does the most likely movement of this market in terms of a massive movement come from? And if this didn't do it to the downside, you really have to start to wonder what's possible as we go into next week if the sun starts to shine just a little bit.